Welcome to Illuminati Silver. We tell you the truth about silver. Today is Saturday the 17th of November 2018 and we're providing our gold and silver weekly update for the week ending the 16th of November. Gold rose $12 last week from $1,209 to $1,221, having hit a high of $1,224 and a low of $1,196. In sterling terms, gold finished the week at £951, that's up £19. And in euros, it closed at €1,069, that's up €2 on the week. Silver rose 25 cents, from $14.16 to $14.41, having hit a high of $14.42 and a low of $13.90. In sterling terms, it closed at 11.23. That's up 31 pence. And in euros, it closed at 12.62 euros. That's up 0.13 euros. The gold to silver ratio fell from 85.62 to 1 to 84.73 to 1. The Dow Jones closed on Friday at 25,413, up 123 points on the day, but down 576 points on the week. And the NASDAQ closed at 7,247, down 11 points on the day and down 159 points on the week. And the S&P 500 closed at 2,736, up 6 points on the day, but down 45 points on the week. Brent crude fell $3.42, from $70.18 to $66.76. And US light crude fell $3.73, from $60.19 to $56.46. The dollar index stands at 96.46, that's down 0.44 on the week. Last week was interesting to say the least, and gold prices were influenced to a large extent by the movement of the US dollar, which was influenced itself by a mixture of economic and political news. So let's look at these briefly. On Wednesday, the Consumer Price Index came in at 0.3% as forecast, and core CPI came in at 0.2%, also as forecast. On Thursday, retail sales were up 0.8%, compared with a forecast of 0.6%, and a previous month's figure of minus 0.1%. So this was a very strong figure, but was immediately tempered by disappointing industrial production figures for October of 0.1%, compared with a forecast of 0.2%, and September's figure of 0.2%. Coupled with this was the chaos caused in the United Kingdom over Prime Minister Theresa May's rejection of her proposed Brexit plan, resulting in a number of senior officials and cabinet members resigning and calling into question her ability to remain as Prime Minister, and certain MPs within her party making a move to eject her. This, to some extent, impacted quite considerably on the euro, especially against the pound, and also the euro against the dollar, which gained some strength there too. Signs that Italy's government were looking to work with the EU over their 2019 budget also aided this process. In addition, US Federal Reserve Vice Chair Richard Clarida told CNBC on Friday that he saw some evidence of global growth cooling, and that short-term borrowing rates were close to neutral, thereby potentially calling into question an interest rate rise expected for September. December. And this, of course, weakened the US dollar, which earlier in the week was on a tear upwards. So the effect on the gold market last week was an initial fall, resulting in a bottom of 1196 on Wednesday, and then a quick recovery and a rise on Thursday and Friday. A number of technical analysts are now calling this 1196 low a secondary higher bottom, which suggests a bullish scenario. Next week's price is dependent on whether we witness buyers above the 1222 level, and if it is sustained, prices are expected to rise to 1246, and if they aren't, then we shall witness a fall to 1206 and then 1197, and if this fails to hold, down to 1167. Of course, if the US dollar falls further, then without doubt gold prices will rise rapidly to and potentially beyond the 1246 level. The COT report shows that producer merchants have increased their long positions and reduced their short positions. Swap dealers have done the same, while managed money have slightly reduced their long positions but have increased their short positions by more than 29,000 contracts, thereby leaving their open contracts on a 2-to-1 basis of shorts versus longs. We shall let you draw your own conclusions from this data. Silver followed almost an identical path to gold last week, and by Wednesday was looking as if it was toast, to use a very high-end technical economic term. However, once again, falling below $14, a very strong psychological floor, resulted in a bounce back, which technical analysts suggest has formed a hammer, which, like gold, is a bullish sign. There are a number of resistance points to break through on its ascent towards $15. But without playing the same old record, it really is, at the moment, all down to the strength of the dollar. We still find it difficult to be too bullish about silver short term. And as our video yesterday pointed out, the latest report from the Silver Institute suggests that for 2018, it is envisaged that mining supply will be up and physical demand down, together with the average price of silver falling for the year. We do, however, wish to make one correction to our video yesterday, which was pointed out by Cappadejo, our unofficial fact checker, who watches us like a hawk, and actually to whom we are genuinely grateful. She pointed out quite correctly that up to the point that the report was produced, the average silver price was $15.89 for 2018. And it estimated at year-end the average for the whole year will be $15.73. We stated that this indicated that we expected prices to fall from here to the year-end. We misspoke. We meant to have said that average prices would therefore be lower than this for the year-end. But as correctly pointed out by Cappadejo, the closing price yesterday was about $14.42. Below the average price so far this year of $15.89. Thus, when the November and December monthly prices are included into the calculation, the average price for those months must rise above today's price to achieve an average of $15.73 for the year end. And this would therefore result in a year-end figure close to $14.93, which of course is higher than today's price. Thank you for that correction, Cappadejo. Now, of course, this is the Silver Institute's assessment and not necessarily ours or Cappadejo's for the silver year-end price. The COT report shows that for silver, producer merchants have reduced their short position by 10,000 contracts. Swap dealers have reduced both their long and short positions, and managed money have slightly reduced their long positions, but have increased their short positions by just over 16,000 contracts. So let's take a look at the economic news to be announced this coming week. On Monday, we have the Home Builders Index for November. On Wednesday, durable goods orders and existing home sales for October and consumer sentiment for November. Thursday, of course, is Thanksgiving, and on Friday, Market Manufacturing and Services Index for November. So next week shall also prove interesting. We believe we are at a crossroads for gold and silver prices. They could actually move in either direction, and is primarily based around the fortunes of the dollar. We are expecting indictments coming out of Mueller's office within the next 2 weeks, and quite possibly this coming week, which will have a political impact. Gold and silver prices in sterling terms, quite frankly, will be almost politically decided with a vote of no confidence likely to be held in the House of Commons next Friday. If the Prime Minister wins the vote, the pound will strengthen. If she loses it, the pound will weaken, and gold and silver prices will fall or rise accordingly. For the US and those spending dollars, we still see the dollar maintaining a degree of strength, unless another Fed official comes out and suggests that interest rates are at a level which is satisfactory for the moment. The economic data this week is likely to have little impact, but we still believe rates will rise in December, but have to wonder why the Deputy Governor felt compelled to say what he did. Either way, Monday may see a small carry-through with positive momentum for gold and silver prices. However, we are not too excited by it, as we do not envisage a major move in either direction. Now, for some inner sanctum housekeeping. Firstly, our inner sanctum Facebook group is open to all silver members. You can access it by going to, and we've put the link on the screen and listed it below this video, but it's basically https://www.facebook.com/groups/Illuminati Silver Inner Sanctum, and apply to join. It will take us up to 12 hours to verify that you are a silver member because of the time difference between UK and other countries in which some of our members live, but it would be faster than that if we can achieve it. We're also sending out some pertinent emails to everyone with information, free reports, and up-and-coming events. The emails will come from two sources, either no-reply@illuminatisilver.com or info@illuminatisilver.com. We have noticed in our testing that some of these are going into spam folders, and so we would ask you please to whitelist those emails so that they arrive safely into your inbox. Finally, our bulletin board is up and working on the website, and we would suggest you look there periodically. And of course, please take part in our forum, especially if you choose not to use the Facebook group facility. Meanwhile, we wish you a very great and entertaining weekend. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and pressed the bell sign so that you are notified of any future videos. Kindly visit our new website at illuminatisilver.com, and if you haven't already done so, please subscribe as either a free or paid member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management, and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice, and merely represent the personal views of its owners.